Hey, what's up, guys? Brian Williams from Northshire Consulting, an independent investment advisory firm in Connecticut. Today, we're going to talk about some tips and tricks for 2024 in Excel to manage your portfolio, but also kind of check up on expense ratios, fees and expenses on the investment options themselves. And then if you're using an advisor, what type of fees they are on top of that. So we're going to go through a few different things. I know there's a million different ways to do things in Excel, and we're going to try to balance going super advanced versus, making this easy for everybody. But at the same time, we want to be efficient with our time. So hopefully we strike a balance there. Feel free to rewind or slow down or go back or do whatever you need to do on that. So the first thing I'm going to do here is I'm going to go up to the Zoom here. I'm going to click to go to 200% to make this a little bit easier for you folks watching there. So what I did is I've put in 6 tickers here. I've got MSFT, Disney, Microsoft and Disney, 2 stocks. I've got 2 mutual funds in here and 2 ETFs. And you'll see later on why I did this, but what we're trying to do is get a few different options in terms of investment types in here so we can see how Excel handles those. So first thing I'm going to do here is I'm going to grab all of these and I'm going to go up to the data tab here and I'm going to click on stocks. And what that's going to do is that's going to convert these cells with company names and take these tickers, make them company names, but it's going to signify to Excel that, hey, we're going to be working with some stocks here and give us some options to make it a little bit easier. So let's see what happens when we click that. Okay, so we click that. We got the 2 stocks in there. We've got the 2 mutual funds, which is great. We've got the Vanguard ETF here. Now, if you notice over to your right, it's saying, hey, we found Ravi, but we got a few different options there. So the one we're going to use is the one that's traded on the New York Stock Exchange. It's a Flex Shares Ultra Short ETF. So I picked that knowing that this would kind of happen here. So let's select that. Let's pop that in here. Again, I shouldn't need to say this, but these are not investment recommendations. This is not, any kind of ideal portfolio. This is just kind of first tickers that popped into my head here for whatever reason. What we do here is we've got a little bit of a column overflow. So obviously this is too much for column B to handle. So we're going to put our mouse in between column B and column C. And you see those 2 little arrows there. If we double click that, it's going to resize the column for us and give us what we're looking for. I'm going to go back up here to the top. What I'm going to do here is I'm just going to put name in here at the top. And I'm going to select all of this. And we're going to make this a table. What that's going to do is later on when we start adding some formulas in here, it's going to just automatically copy them down for us. So I'm going to go back here to the home option. And we're going to format as a table up here. And we're just going to pick one of these. We've got a black and white one here that we'll use. We're going to say it has headers, yes, because column B, row 3, where we typed in name there is a header. It's not one of the stocks or positions that we're going to be working with. So let's click OK. All right. Now, if you notice up here, now it knows that this is put this little building type thing into the cell here. So it knows we're working with some stocks. Okay. So we started off with tickers. A lot of people want that back on their spreadsheet. So let's add that back in here. So you'll notice we've got a ton of options here that we can scroll through, and we're going to select ticker symbol. So because this is now we formatted this as a table, it's going to copy all the way down the column. So again, we'll double click this. We can make it wider. The other option we can do here is we can choose this whole row 3 and say, hey, if this column header is a little bit too big, we can wrap it. So if we shrink this down, it will put that on 2 rows. We'll double click that like we did with the columns to make it a little bit bigger. That's just an option if you want to keep it a little bit tighter here. So that's what we'll do this time around. We can leave this ticker symbol here. We do have the option to kind of rearrange that. We could select this whole column and paste it here if we wanted to, but that's going to take it out of the table that we built. So we might want to just undo that. Control Z will send it back there. You may want to delete this column just to give you a little bit more room here. So now we've got our name and our ticker in here. So we want to get a price. So we've got, what is your 1 share of Microsoft worth? So we can do a couple different things here. So we've got a price, which would kind of be a live price. So if we think about, remember, stocks and ETFs trade during the day, and mutual funds just have that kind of end of the day price. So if we're building this to kind of be a, during the day thing, I want to log in at, 12:30 and just see what my portfolio is worth. Then you would do the price. If we're just kind of doing this as an end of the year wrap up, or just something we kind of log in and check at night, you may just want to use the previous close. That'll give you, if you're doing this on a Sunday, that'll give you Friday's close. If you're doing this on a Wednesday, it'll give you Tuesday's close. So let's just do previous close for now. We'll put that in there. And that will, again, that'll wrap this header. It'll put that automatically in for you, and it will put that in the column here. Now, this is where you might want to get into some manual entry. So we're just going to assume that you own this portfolio and own some shares in this stuff here. So we're just going to put in some shares here. Let's say you own 100 shares of Microsoft, you own 85 shares of Disney. Typically with stocks, you'll have a round full number there, a whole number, because you'll buy that, and then you'll have the option of dividend reinvesting. So that might give you some fractional shares, or if you're on a system that allows for fractional shares. But for the purpose of this exercise, we'll assume that you have whole numbers there. So we'll put shares in here. For mutual funds, typically you'll buy them as a dollar amount, right? You won't say, I want to buy 100 shares of BALFX like you would 100 shares of Microsoft. You're going to say, I want to put $1,000 in BALFX, and then that'll be calculated back to shares. So chances are you probably have a share count that looks something like that. Same thing with SWPPX, same thing, that's a mutual fund. So let's say you got, 201.2. With ETFs, it's kind of a mix between the two. So you may have a round lot, you may have a whole number in here, you might have bought 100 shares. But if you have dividend reinvest, you may end up with kind of an oddball amount. So let's say you've got 100 shares of this VTI ETF, and let's say you got 105.732 shares of Ravi. Okay, so if you want to look at your position value, so let's put value in here as a header. So obviously that's just going to be your share count, right, times the previous close. Okay, so now you know what the value of that position is. You've got, and it automatically put this dollar amount here, put the dollar formatting on there for you. That's the accounting format. So now you've got the name, the ticker, the previous close, shares, and value. So one of the things we can do is we can go back up to this, go back up to table design, and one of the options is to put a total row in here, okay? So now it's going to give you the total value of your portfolio. It's number signed here because we need to make the column a little bit wider. So now we've done that. We got 140,000. It doesn't really make sense to total either of these two columns because these are kind of, irrelevant data points. But one thing we can do is we can do a count. So 6 positions here, it's going to count those up for you. And we may just want to move that to the left here so we've got a count. Okay, we've done a pretty simple spreadsheet here with 2 stocks, 2 mutual funds, 2 ETFs. So we kind of remember what they are from a security type standpoint. But that, if we had something more advanced, or if we wanted to run some filters later on, we may want to have that data available to us. So we're going to click this add a column here. We're going to go back in here. And what we're going to look for is something that might tell us what type of security that is. So we've got this instrument type here, okay? We're going to click between column F and G, and we're going to make that column. So now we know we've got 2 stocks, 2 mutual funds, 2 ETFs, and let's see why that might be important later on. One of the main reasons I put this video together is we had some questions about expense ratios on mutual funds, ETFs, and then also what advisors are charging and how do I kind of figure all that out. So we're going to go back to this plus sign here to add a column, and we're going to look for expense ratio. Well, these are alphabetical, obviously. We're going to click that. So Now we see that we've got expense ratios for the two mutual funds, 62 basis points and 2 basis points. And we've got expense ratios for the ETFs. But stocks don't have expense ratios in that sense of the term. You're not, Microsoft is just a stock. It's not a collection or a basket of securities like stocks and ETFs are. So how do we clear this up and how do we get rid of that field? Well, there's a few different things we could do here. Again, I don't want to get too complicated as far as Excel formulas and that type of stuff, but we do want to clear up this error. So we could just say if there's an error, make it 0, but we don't really want to do that because that might give us some bad data later on. But we're going to put in an if formula here, IF parentheses. So we're going to say this is a logical test. So we're going to say if this column here, if this cell here equals the word stock, equals stock, okay, then make this 0 because we know it's an expense ratio for 0. Then we're going to put another comma here. And then if it's not a stock, just put the expense ratio in. Okay, so we'll put closing parentheses on there. We'll hit enter. Now it's giving us that 0 value. And remember, because this is a table, it's going to copy that formula all the way down. So we have that in these other fields. We probably don't like the fact that this is showing 0 as the others are decimal points here. So we can select that whole column and we're going to go back here to this format. Click percentages and then add in a couple decimal points there. So now we're going to do a formula here just to figure out, we've got the expense ratio in terms of percentage points, but we don't have it in terms of dollars. So we're going to say expense dollars, okay? And what this is going to do is we're going to give the expense ratio times the value of that position, okay? So we know that from the 62 basis points of 48,000, okay, is almost $300. So that's the dollar amount you're paying for the management of that position. Almost $3 here for the S&P 500, the Schwab mutual fund, and then you've got the couple of ETFs here. So this is a column we probably want to total out. So we've got a down arrow here because it's a table, and we're just going to say sum. Okay, so we know that the total of the expense dollars in here is $329. Now, this expense ratio category here, we don't want to add this. That doesn't really make sense, but it would be nice to have a value here at the bottom. So what we're going to do is we're going to just take this dollar amount. We're going to divide that by the total portfolio value of $140,000. It's showing 0 here, but we know that's not really 0. We're going to change that to percentage and give it a couple decimal points, and we're at 24 basis points. So you know the overall expense ratio for this portfolio is 24 basis points. Now, if you wanted to add a little bit more here, what you could do is you could put in investment costs, okay? And we're going to make this all fit just by pushing it back here. We're just going to go up and we're going to copy this information or reference it from up here. And we're going to make this put this into the currency format. Now, if you're paying an advisor or if you're in some sort of wrap program, or you may even hear the term TAMP, which is a turnkey asset management program, which an advisor might be sort of outsourcing the investments and the management of that. So that could be through a TAMP or through another third party, but we're just going to put advisor costs in here, and then we'll put third party just so we can have this in here. If I knew how to spell party, that'd be great. So we will justify these here. So we can do a couple different things here with this. What we can do is we can, we're going to put the advisor costs in here. Let's say you know your advisor is 50 basis points, okay? You're going to put 0.50 in here, and we're going to say, okay, what's 50 basis points of this $140,000 value? Okay, so we know that's about $700 a year. We're going to match this formatting. We're just going to do a format painter, and we're going to put this all the way down here. All these formats match. Okay, so now we've got advisor costs at 50 basis points. And let's say maybe they're outsourcing that for another 25 basis points. Again, I don't really want to make this a big fee discussion of that kind of stuff, but let's just put this in here so that we know. We're going to do 25 basis points times total portfolio value. Okay, and you might want to just underline these, and then we'll total them up. Okay, so you can sum these together. Okay, and then we're going to take this. We could add all these together too. That would give us accurate reading of what we're doing here. And so you know that you are in at just under 1% between the investment costs of the portfolio, the advisor costs, and then any sort of third-party wrap program